Welcome to this very special edition of the KAJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And today we have Adrian Knight, acquisition entrepreneur, business turnaround expert, founder and CEO of a spectacular group, a speaker and author. And he's joining us live from England, United Kingdom. Welcome to the show, Adrian.
Thank you so much, AJ. It's an absolute honor to be here. Thank you. Thank you for having me.
You are welcome to the show. You are welcome to India in this digital form. And I'm sure not just in India, but a lot of people across the globe will benefit from what we are talking about. We'll be talking about how to buy a business, how you can buy a business without risking your own cash. So we'll be talking about that. So let me ask you first, Adrian Knight. You know, in business deals, especially in mergers and acquisitions, they talk about the white knight. And you are, so many times you become the white knight, the knight in shining armor for the businesses. And so I want to understand, you know, they also talk about the black knight, and that is about the hostile takeover. Which side do you generally represent when you do your business mergers and acquisitions deals?
Well, when you're buying smaller businesses, you are always going in as the white knight, and that's a genuine like it's nothing. There's no hidden agenda. It's a moral and aligned purpose for you going in there. It's because the reason that owner is looking to sell is because they have problems, and for various reasons they no longer want to deal with them. And so when you go in, you're always assuming that role of a white knight and bringing more energy into the business and sort of hitting head on the key problems that are impacting that business.
Absolutely. So especially from a small business point of view, you know, let's remove the big business, very, very big businesses from out of the equation. Is that a lot of small businesses look at buying other small businesses for their own reasons. And you talk about, you know, how one can buy a business without risking your own cash. I want to understand for them, how can they do it? And especially when you don't have cash. So if many a times, forget about the risk, you don't have cash. How do you go about it then? I want to understand almost like a step-by-step method. You know, you have your, and for many it is the first time they would be thinking of buying a business. Help us understand this particular process, which you are an expert of.
Absolutely. Well, before I go into the how, I'm going to briefly talk about the why, because the why is the important part here.
Right.
So when you go into smaller businesses from a perspective of you may be interested to buy them, you are going in to a much smaller entity that may have anywhere from a couple of employees up to 20, 30, 40 employees, which is considered quite large for a small business. And so the one thing you need to know and to accept is that you're going into a bunch of problems. And some of these problems you will know before you go in, but a lot of them, inevitably, you won't know. And sometimes that's because the owners don't want to tell you what the real problems are and therefore lose a chance of selling their business. And other times it's because the owners themselves don't know, like they don't know what they don't know. But I can promise you, having done multiple acquisitions over the years, every single business will have problems. And so when you're looking at this from a perspective of you're buying a business, you have to go in with a thinking of your risk. It could be very easy to get caught up in all the things you can do with a business, but if you're having to sell your property, sell your assets, and risk all of your money and put your family's well-being on the line for this, then you need to think very carefully. And so knowing that there's going to be a load of problems, do you want to be risking all of that? So when you are looking to buy a small business in particular, you need to approach it in a slightly different way, which is getting under the surface of the business a bit more, and also the motivations of why the seller is looking to sell. Like, what are they trying to achieve here? Very often there's forces outside of the business that is driving the seller's motivation to sell. So for example, health concerns is quite common, either their own health concerns or immediate family, or maybe even family friends who've recently had or suffered ill health, and it's made them realize how short life is and they want to do something different. Understanding that and all of those motivations is key, because it allows you to structure the agreement, the deal for buying the business in such a way where you don't need to be risking everything, because you already know you're going into a load of problems, and half of the problems you won't know until you get in there. You know, it's a very high risk approach, like paying loads of money up front. So the buying the business with none of your own cash is sort of, people tend to glamorize it, thinking, oh, you can buy a business for £1 or $1 or whatever it is. It's a lot deeper than that. It's about a mutual understanding between the buyer and the seller, where both of your risks are being protected, and ultimately it's so that the seller can exit the business, so that the buyer can come into the business and continue and ideally grow the livelihood of that business for the benefit of the owner plus the employees. So the why is always the key motivator. If you're just going in because you just want to buy any business for none of your own cash, then it's probably not going to work out very well, because there's always a cost. You may not be putting money in, but if you're not putting money in, you will be putting your time in. I can promise you that, and you will be putting other sort of resources in. So it's always a cost.
Right. So I will come to understand from your other key tips for buying your first business. But first, I need to understand, for the business owners, is buying a business for everyone else? Everyone. Does it work for? How do they know whether I should go for a buy or not to buy? And at the same time, you talk about that you don't buy something which is at a sale. Then who will tell me what is there to buy at all? So it becomes so many questions and tricky ones. And again, to that, I want to know that is why you need certain skills. So help us understand what are the skills needed, so that you can maneuver those skills and find out all about this buying or not buying a business, that too without using your own cash.
It's a brilliant question, AJ, because the process of buying a business is very simple. The easy part is buying the business. The hard part is what you do once you've bought the business. That's where the work comes in. So going back to the question, should I buy a business? Like, anyone can buy a business. It's a very simple process to follow, but should you be buying it? Like, if you spent your entire career working as an employee and you don't quite like the idea of taking on some risk, and you like to have things very secure, then maybe it's not the best path for you. If you're an existing business owner, an entrepreneur, if you've always wanted to own your business and you're prepared for the realities of being a business owner, then it very much could be. I always think it's a lower risk. I talk a lot about risk because it is down to risk management. I always think it's a lower risk to buy a business than to start one, because with an established business, everything's already worked out. You just have a few problems. With a startup, you have to figure everything out by yourself. So anyone can buy a business, and the process is simple. The first step, above everything else, is you need to understand and really get to know the owner of the business. Why are they looking to sell? Because almost certainly the reasons they tell you on the very first conversations are not going to be the actual reasons they're looking to sell. Not always from a place of they're trying to hide stuff, but sometimes the owners just don't know themselves. So you need to understand what the core motivations are there, and you need to decide whether this is a type of opportunity you see yourself in. I can't stress enough that the easy part is buying the business. Like, it really is the easy part. It's what you do when you have it. So you need to understand in as much as much as you possibly can at this stage, what's the reality of the situation with the business? Why is the owner really looking to leave? Once you have that, you then start to get into the more process-driven stuff. So looking at financials, and then you look at those quite early in the process so that you can ultimately start talking about, well, how would we buy this? So the big challenge with buying a business is that very often the owner's expectations on what the business is worth tends to be a lot higher than the business is actually worth. And so getting to that conversation sooner rather than later will just save everyone time all round, and will help you and the owner know whether there is a deal on the table. Essentially, once you've got to that point and you've agreed an outline structure, like this is how we want the deal to look like, you're then going through a process of checking the facts, the sort of due diligence, checking the facts, making sure you're buying, like what you think you're buying is the reality of what you're buying, but also knowing that there's going to be stuff you're not going to find out this side, and ultimately making a decision about whether you want to move forward with it or not. And then once you make that decision and assuming everything's okay, it's simply the case of having the correct paperwork and executing on that. The process itself it's actually a very quick process. The fastest one I've done has been about 2 weeks, the fastest acquisition. Most of them will take somewhere between 3 to 6 months. It depends largely on the owner of the business, how quickly they get the information you need back to you, and also whether they're mentally prepared to exit their business.
Right, Adrian. So help me understand one thing. Should one buy a business which is in good shape or a bad shape? Generally, people think that if it's in bad shape, I can have a good deal and scale it up, work on it, turn it around, and then I can again sell it off. So that will be a good thing. But nowadays, you see a lot of small businesses, startups, they start with the intention of, building a company, scale it up a bit and to a certain level, and then sell it at a good price. So that's running business. What do you suggest in terms of when such deals come to you? What should one start with in mind, in terms of should I go for a bad company or something which is in very good shape so that I don't have to work very hard on it?
Well, they both have pluses and minuses. So the pluses of buying a well-run business that's generating a good profit is the fact that it's a well-run business generating a good profit. It almost certainly has a team of people in place, which means from day one, your involvement and your role within the company, you're in the position where you can choose what that will be, if any, and you have a well-oiled machine from which to build upon, or just to let it run. The downside to that is that from a buyer's perspective, is that the owner of that business does have a good business, and of course they will want a good price for that, and they would expect a lot of the money, if not all of the money, on day one. And it's whether you're in a position where you can do that, whether that's through your own cash or through borrowing money, which of course is taking on debt. Either of those options, the debt or your own cash, you still need to recognize that when you buy a business, it's not like buying a property where you've got like bricks and mortar, something tangible. You're quite often buying nothing more than a bunch of contracts, people who aren't guaranteed to stay, and these problems that are going to come up. You just don't know where and how big. So that's the sort of the plus and minuses for a well-run established business. For a stressed or possibly distressed business, the upside is that typically the owner is just burnt out. They want out. They are fed up of it. They just want to hand over and go back to their life, or to do something completely different. That often means that from a buyer's perspective, you can structure deals a bit more creatively, and you can share the risk with the owner of the business. So you're going to go in, you're going to try and fix it, but yeah, you know, if you can't, then it's both of you're spending your time, and the owner's potentially walking away from some of their consideration. The downside of that is that depending on how stressed that business is, it's not for the faint of heart. So going into a business that is lightly stressed is okay, but if it's got some big problems in there, then you will get swept up into that. It will be a lot of hard work. The rewards are there if you manage to turn it around, but it's not guaranteed. You know, I've had turnarounds where I've failed, and unfortunately, that's just a nature of the beast. It's a nature of the situation. So yeah, you have to be very mindful and honest with yourself. Like, where do you fit on that scale? And it goes back to like, anyone can buy a business, but not everybody should. Yeah, how are you wired up personally? So
right. Okay, Adrian, let me understand it for the audience through your example. First company you bought for £1, if I understand, and sold it
yes,
for a six-figure profit.
yeah,
And your recent acquisition, £30,000 within the first week and continues. And then you want to grow into the education sector and get your company listed on the LSE. So
correct.
help us understand, what are the guiding forces? Is it money and then you move into the education sector? What is it that has made you successful, and what is it that you want to do with money? Because moving into education sector looks like that it is not just about money for you, it is also about some purpose. Help us understand the reason behind your success and what to do with that success.
Yeah, I mean, when we had the global pandemic a few years ago, like when it all really kicked off back in 2020, I, like a lot of people, took a step back and reevaluated my life, and I very quickly realised that just working for money wasn't enough for me. I couldn't see it, didn't have enough fulfillment in that. I needed something more for the hard work I was doing. It had to be more than just for financial benefits. Financial benefits are important, but it's not the only reason. And I'd recently become a dad and was exposed to this whole new world of children and all these little people, and understanding and getting, like, I try to be a hands-on dad, so getting into my daughter's life and going to different educational groups that were helping her to learn key skills. And with my sort of business or entrepreneurial hat on, I was looking around thinking, "Ooh, this is not what I was expecting." I felt like there was a lot of disconnected parts to a much bigger wheel, but the center of these wheels were these lovely little children that are our future. And so I made the decision over a period of a couple of months of sort of looking at it, that children's education was a space where I wanted to be. And I wanted to be there primarily for the development of children. However, I also appreciate that to bring that to life, you need to have good, strong commercial businesses that are making money underneath them, because without that, you can't bring that together. And so I took a slightly different approach with my skill set of buying and selling businesses, and started to use it to build a small group of companies, which is called Spectacular Group. And within a very short period, it was within 24 months, we went from a standing start, having no experience of the sector, to 17 employees, multi-million turnover, and we currently educate 10,000 under 5-year-olds every academic term here in the UK. So that's been a great source of fulfillment. It's been an amazing journey, and we've only just started. So
Right. You use this word called, acquisition entrepreneur, and I've heard many sort of entrepreneurship, intrapreneurship, so many stuff. What is this? If a person wants to understand what is this acquisition entrepreneur, can you help us understand, and how can one become this acquisition entrepreneur? And is there a life for an acquisition entrepreneur in today's time?
absolutely. So prior to my sort of journey starting in buying and selling businesses, I was a terribly failed startup entrepreneur. I'd had around 12 startups and failed all 12. I was a terrible person at starting businesses because I'm more of the creative vision type energy, would go in and would inspire the team. But when you start up, you don't often have a team. So I'll be inspiring myself. And then when it came to having to put the systems and the processes in place, that's where I started to fall down. Now, as it turns out, that skill set is very good when you're buying businesses, because you're going into companies that quite often are sleepy. There's a lot of problems that need addressing, but no one wants to address them. So you can use that energy and that sort of force and that inspiration to start tackling some pretty big problems, and the creativity to solve them. So that works very well for me. But I've, in hindsight, realized that there are different flavors of entrepreneurs. You have different flavors of business people, and I suppose the big step forward for me was when I truly understood and accepted that I'm more of an acquisition guy, and where also I need to pull back. Once an acquisition's been done, there's a point where I need to pull back and let people who are far better than me go in to run the business. And so I think it's, are you an acquisition entrepreneur? It's like only you can answer that, really. And it's being honest with yourself, as with all of this, and just seeing where your strengths are and playing to them.
Absolutely. All I can say is that there are many shades of entrepreneurship. It all depends on which shade you like and which one works great for you. And I must say, this is one good one, which people can adopt if they like it. And this is as per what suits them best. There is much to learn about entrepreneurship, about acquisition for small businesses, big businesses, and so this podcast is just one podcast. I'm sure a lot of people who want to get in touch with you, learn more from you, and also people who want to, get your help, want to be professionally engaged with you. What's the best way for them to do so?
Yeah, so I am very active on Instagram. Instagram is the only real platform the social platform that I use. I share my life very openly, so I post on there several times a day, and I post everything from like my morning routine. So I get up at 4 a.m. every day, and I spend the first 2 to 3 hours focusing on myself and improving myself, and that's been the secret sauce to all of the acquisitions and to the business growth, all the way through to showing people inside my businesses, showing people the team, the offices, talking through what type of deals we're looking at and why we may or may not want to go forward with them. So Instagram is by far the best place to find me. I'm also very active with messaging people. I get a lot of messages, and it's always me responding to people. So if anyone is interested and would like to follow or learn more, then my Instagram handle is Adrian J Knight, and that's KNIGHT, a white knight, as you termed AJ. And so, and I love connecting with people and understanding more about them and helping them to figure out, is this potentially right for them? So
wonderful. On this note, it's a wrap on this very special edition of the KAJ Masterclass Live. Thank you so much indeed for joining us.
Thank you.